This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, June 30th, 2016. Euro dollar. So despite this latest bounce in the euro over the past several sessions, the market overall remains pressured to the downside following the recent break below 110.98. Look for any rallies to be very well capped at below 112 on a close basis in favor of the next downside extension below last week's low, which came in at 109.12, a break below which would then expose medium-term support at 108.23 further down. Again, only a close back above 112 would really compromise the immediate bearish outlook for the euro. Sterling dollar. So cable remains under intense pressure with the market trading just off plus 30-year and plus 31-year Brexit lows at 31.20. At this point, look for any rallies to be very well capped ahead of 138 to 140 with a lower top side out ahead of the next downside extension below those recent lows at 31.20 and through 130 further down. Dollar yen. So dollar yen remains confined to a very well-defined downtrend with the market bouncing in recent trade, but this rally is only viewed as corrective in favor of what should be the next lower top ahead of the next downside extension below those recent 2016 and multi-month lows at 98.99. Euro Swiss. So Euro Swiss has done a good job bouncing out from recent lows at 106.23, though the market now is trading back into the middle of a range, but could be poised for additional upside towards a retest of the range highs at 111.30 to 112. At this point, while the market holds above 107 on a close basis, the overall structure remains constructive, while a break and close back below 107 would put the pressure back on the downside. Aussie dollar. So Aussie has recently seen a rally all the way up to 76.47, but it looks as though the market is looking to put in a lower top by that level below that 2016 high at 78.35 in favor of what could be the next major downside extension. Of course, we would need to see a break back below 71.45 to confirm and strengthen the bearish outlook. Dollar CAD. So dollar CAD continues to show signs of a medium-term base since bottoming out by a 2016 low at 24.61. A higher low looks to be now in place at 26.55, but this will need to be confirmed on a break back above 31.89, which would expose the next upside extension towards the 135 to 140 area. Kiwi dollar. So Kiwi has done a good job pulling back in recent trade from those 2016 highs in the previous week at 72.97. But at this point, we'll need to see a break back below 69.63 to take the immediate pressure off the top side and accelerate declines towards next key support at 66.75 further down. SPX 500. So although the S&P 500 has seen an impressive rebound over the past couple of sessions, overall the pressure now is back on the downside following the recent break below 2020. At this point, look for any rallies to be well capped ahead of 2100 with a break back below that recent low that we saw all the way down around 1990 to open the door for the next major downside extension towards a retest of the 2016 base at 1808. At this point, only a close back above 2100 would delay this bearish outlook. Gold. So gold remains very well supported into dips, and the market is now slowly grinding higher towards the next key measured move objective at 1400 further up. Look for any setbacks to be very well supported ahead of 1250, with only a break back below 1200 to really compromise this bullish outlook for the gold market.